Hey traders, we're doing an update on FunFair. If I do a top down, monthly doesn't really show anything, so we'll go right to the weekly. You have to take out this first week range from the ICO to get a decent chart. When you do that, this is what we have. So you can see, looking at the weekly, this is what I would focus on longer term. We have the initial base that broke like that, and then you'll see that they ate relatively flat, and then it started to descend this red line here, and that created what we call a swing line setup in our model. So once you kind of break to new lows on the weekly level here, you start to track each candle's prior high, and you didn't really take out the prior week's candle until this week, but then you experience no follow through the next week. Couldn't take out the high here until this candle, and then that was the move to new highs that started the next move up, and that was a four to 5 week rally. And what's important to note about this new move, when you move intermediate term, you turn back up, but then you move to a new highs relative to here. It's going to be very difficult for price to go from here all the way back to a new low without some sort of another ebb and flow back the other way. So what we look for then is, this is one solid move right here. If you put all these candles together, that creates one giant candle, and about halfway is where you kind of would look to start to enter a trade again on the long side. Doesn't mean it has to stop halfway. You can pull back more, but the fact that we're holding down here, it's kind of hard to see with the settings on the chart here, but the bands are right down here also. So the point being is that this weekly is a long-term uptrend, and I expect us to probably make a higher low here, and then the next move be back up on Fun. You can probably see this a little bit easier on the daily. Okay, that's from a price perspective. When you look at it from a time perspective, this is why it's important. The cycle turned up here in December, right before price went on its move higher, and then you had a nice cycle. And now we're actually sitting through a weekly down cycle. So this may turn up this week. It may cycle all the way into April. It just is what it is. So that cycle is actually in a down cycle. So you have a price that's bullish, but from a time perspective, the weekly's coming down. So it's not one or two factors in deciding whether or not you want to start a position. We just need to be aware of the information. So we are in a weekly down cycle. You go to the daily chart. Why is this like that? Do not know. Did they move off this exchange? The Bitrix exchange? I didn't know that, guys. 1 second. Finance. Weekly. See that same wall, guys, in the weekly on Binance? Maybe they got taken off Bitrix. All right, we'll use this chart. So a lot better view here from a cyclical perspective and from a price perspective on the daily chart. So let's break down that also. So here we can see the long-term bear market. I call it long-term anything daily higher. So if I'm looking at a daily chart and I got a descending 8, and I have the bands that are all negative sloping, and I have lower highs, this to me is a long-term bear market at this point. So to me, long-term is several months to several years. You basically had a down move from October that lasted all the way really till the mid to late December. So wasn't until we broke above this high, we got above the bands, that was the time to be bullish. All right, you see how the bands all flip up? You start making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Held the bands here. All right, and then now not holding the bands here was a sign of trouble. And then the market, you'll notice, took one day, ran the stops probably through these lows, and then came right back up. A lot of times when you break to a new low in a big area like that where there might be stops and then you come right back up, a lot of times that'll be the low. It's just sometimes the way you play that. Sometimes if you're long, maybe you stop and then the market turns around and comes right back and takes out the high of the candle you stopped on. You just get right back in. Sometimes that just happens. Markets like to go where the most pain is. They run the stops and then it comes right back up. But this is definitely where the risk is now. So you had an intraday break of this low followed by a strong move up that did experience 2 weeks of follow through, and you bounce to a lower high relative to these highs. So you've got this wedge going on right now, consolidating, descending triangle. All right. So this is where the risk is on fun for sure. Do not want to be long if we break that low. In our model, that's where the risk is. We don't have a position currently. We had, but I think what we want to watch from here. Let's clear this. See if you can hold. See if you can take out the swing line. Excuse me. That'll get the intermediate term back up. But really, we want to clear the bands. We want to start to gain traction again above the bands like it did here. And start to make higher highs and higher lows. That would be where you'd want to commit more capital. All right. I think that sums it up pretty good on the daily. When we look at the 4 hour, it's going to be more of the same. Intermediate term downtrend. So you'll notice here, we have price when it's in an uptrend from the end of December when it started to turn up. You see prices in what we call the northern hemisphere. It's above the pi line. Prices above the 200. That's all indicative of a bull market. Now you've already seen the 200 start to roll. Price is below pi, so it's just not. This is a 4 hour chart, so this is the intermediate term. It's just not ready to go higher. And you've got nothing but lower highs lately. Lower highs, lower highs, lower highs. So we need to change that trend before you're going to get any kind of upside momentum. You know, this was pretty oversold here. You bounced, failed at the underside of the 200. You know, that's probably that's the intermediate term range. And again, this is the big risk level. So if we can get above this high, maybe that'll turn the intermediate term back up. That's your pivot now to watch right there. But this is a pretty soft market right now. There's no reason to be being aggressively building a position in here until this turns back up. All right, guys. Hope that helps. We'll have another day in the 100 for you tomorrow.